Welcome to Money Anchors. We are going to talk about last week's Nifty and outlook for the next week. So coming to global markets.
So Dow Jones, S&P 500 and Nasdaq all were down 3% due to the weak economical cues and raising inflation. US markets were red 3 out of the 5 trading sessions, primarily due to the inflation data.
Yes.
And the discussion around rates increased from 25 to 50 basis points. European markets closed lower due to the hawkish comment by Fed.
Yeah.
And most of the trading sessions globally has been red as well.
Yeah.
So I predict that the market's consolidating and going sideways.
Yeah.
So let's talk about last week Nifty, Kashyap.
So we had predicted that the key support and resistance values were about 17,500 and 16,900 for the Nifty for the last week, and the Nifty was trading also at around 17,400 to 16,950 levels. So what we had predicted was closer to each other. Last week's Nifty width, it was around 500 points, but for the previous week it was 350 points, which was a little bit higher this week because of the higher volatility as well. So coming to closing candles.
So let's talk about the Nifty closing candle. Markets would manage to end red candle showing doji pattern. Referring to global indices, it shows it could be a gap down in the market.
So we'll talk about India VIX. And Monday and Tuesday VIX has shot up to 20 and fell back to 17 and 18. This is primarily due to the huge gap down on Monday, right? So as of now, the India VIX continues to be on the lower end and currently at around 18.35, right? So Pawan, let's talk about open interest.
We've seen 3.5 and 4.44 million calls here, contracts at 17,200 and 17,300 levels. At the same time, 5.8 million put sales, contracts at 17,000 levels. This also gives a strong support at 17,000 levels. Also, we see strangles between 17,000 to 17,500 Nifty ranges for the month-end expiry. Due to global indices are being weak, this may change anytime.
Yep. So coming to support and resistance values, support is at around 17,200, 16,950 and 16,800 levels, and resistance is at 17,250 and 17,400 levels.
PCR is at 0.7, and in case if it doesn't move to 0.8, we can anticipate a bearish market. So let's talk about the FIA and DIA data.
So coming to FIA and DIA data, so FIAs were net sellers of 18,400 crores, DIAs were net buyers of 14,300 crores. So just like last few weeks, FIIs have been dominating this week as well. There are speculations of pump and dump going on in the market. Even Zerodha has informed about the same. We will do a separate video on it. Do subscribe to know about it more. Coming to gold prices.
So while continuing to be above $100 per barrel, the oil prices fell slightly due to lessened demand from China. Gold prices moved up marginally due to inflation haunting our economy, right? So what about blue chip stocks?
Yeah, the last week blue chips were very interesting. Because of Nasdaq, there are a lot of stocks correction. It has impacted India's stocks as well. So TCS has actually opened gap down on last Monday from 3,660 levels to 3,610 levels. And Infy 2 fell from 1,700 levels to 1,550 levels, which is about 10% nearly the correction. Same from HDFC Bank as well. It has also corrected from 1,480 levels to 1,350 levels. Reliance has bounced back from 2,500 levels to 2,700 levels, which has gained about approximately 9 to 10%.
So let's talk about summary. Last week we had mentioned that markets opening gap down followed by consolidation and recovery. So we exactly saw the same until Thursday. So Monday opened a huge gap down, Tuesday and Wednesday was consolidation, and Thursday was a big rally, right? So on Friday we saw a gap down due to Nasdaq falling and dragging the IT sector down as well. And also some level of profit booking has happened on Friday. So we expect markets opening gap down again. However, we see markets consolidating throughout the week. Right? So post consolidation, if the market fear factor dominates, we may see a bearish movement.
Do subscribe and like our video and follow us on Instagram. Link is in the pinned comment. Thank you.
Thank you.